For the first time in history, we actually have two really good platforms competing with each other.
And honestly, I'm surprised that we aren't down more.
And I think this is the big one for anyone in the e-commerce game at the moment.
You also have continuing strength on Transpac, maybe not so much direct China, US.
Airland is very strong into Africa, and of course on the Asia to Europe market segment as well. And that's where Atlas, of course, has less coverage.
Volumes dropped to the US, but you're right, they flowed to Latin America and you just saw it.
I think forecasts are generally almost always wrong.
Hello and welcome to Air Cargo Unpacked, a freight buyers club production brought to you by Ontigos Cloud, the freight forwarder profitability specialist. I'm Mike King, and with me as always is Neel Jones Shah.
Thanks, Mike. Coming up, we've got the best rates analysis in the game from Neil Wilson at TAC Index. We're going to be looking in depth at the charter market, business out of China, and some very mixed demand signals.
But in a break from tradition, we'll be discussing all these stories with our guest today, who works for a company that operates 113 wide-body freighters across more than 300 destinations in 90 countries, accounting for approximately 13% of the global wide-body freighter fleet. He's Chief Commercial Officer and Head of Sustainability at Atlas Air. Richard Broekman, welcome to the Freight Buyers Club.
Thank you, Mike, and thank you, Neil. Really pleasure to be here. A lot of things to talk about. It's been an interesting year. It's been actually interesting many years already, and the challenges keep coming. It's a bit of a roller coaster in the market, but a lot of good developments as well. So looking forward to discussing that.
Yeah, we're looking forward to going through it with you, Richard. Let's a good starting place. Our first story today. IATA has just published its June global outlook. It's sort of a sobering read on demand. Cargo growth is now expected to be just 0.7% this year, which is down from 2.6% forecast in December. But maybe the more interesting story is in this table. Those who are watching can see freight rates are forecast to rise 6.5% and load factors are climbing. I want to hear if that matches what you're seeing, Richard, in a moment. But Neil, to you first, anything grab your attention, and how seriously does the industry actually take these IATA forecasts?
You know, I don't think these headline numbers are surprising at all, right? We've been in the middle of a pretty serious conflict for the past 3.5 months. So for demand to come down a bit from the forecast in December is expected. And inflation has spiked. And honestly, I'm surprised that we aren't down more. I mean, this really highlights, the resilience of the global consumer. And remember, we're also comparing this market year over year, and 2025 was a very strong year. So to be up only 0.7% over 2025 is actually no big deal to me, and no cause for panic or concern. The data is showing that APAC continues to be the growth engine, but that's not really a surprise, right? I mean, APAC has always been the growth engine. But I think the dynamics are changing a little bit. And I know we're going to hear from Richard on this in a second. But, if you look at China, right, and we a lot of statistics were presented at the TIACA conference in Warsaw a couple weeks ago. But, you see a big shift. You see Vietnam up plus 30, Thailand up plus 30, Taiwan up over 100. Right, due to the hyperscalers, and China is down a little bit year to date in the Transpac market. I'm talking about. So overall, air cargo reacts to what's going on in the world, and as a result, oftentimes forecasts are wrong, right? I mean, if you put a forecast out, things change. The forecast is going to change, and directionally, I think forecasts are really useful tools. And I'm by no means picking on IATA here, and it's good to study and be aware of all of the forecasts. But I think directionally they're great tools, but they're never going to be dead right. But over to you, Richard. What are you guys seeing? You're in the middle of everything that's going on globally with air cargo. I'd love to get your views on what you're seeing on a macro basis.
Sure, Neil. Look, I think I'm with you. I think forecasts are generally almost always wrong. So that's one. I think that they change, I think, is more interesting. The change of of their adjustment, the direction of the adjustment. Of course, with all the things that are going on in the world, with the conflict in the Middle East, that there's impact on the air freight, and there's a bit of a reduced demand, or that there might be a little bit of little slowdown. That's not surprising. We had some time the capacity was gone as well. Quite some substantial capacity. About 15% of the capacity worldwide was grounded for about a month. And of course, freighters in the Middle East have come back since. Passenger flying is still a bit lower, so belly capacity is still less in that area. Um, so, but overall, I think the market is very strong. I do expect we're going to end up higher than what IATA forecast. That's just my own prediction, and just seeing what I hear from customers, seeing also demand signals going into June, into the rest of the year. They're quite strong. Continuously, e-commerce is a big driver, right? Out of China. While there has been a lot of headwinds there last year in the US, this year in Europe as well. Overall, it has proven to be really resilient and come back after a while and find different markets, and continues to grow as well. Um, General freight will continue. The other part is, of course, that there's a massive increase in demand from hyperscalers, which is just mind-boggling. And if you hear the investments out there, that's probably going to continue. So overall, I think regionally you'll see some impact and you'll see some changes here and there. But I think the general direction of the market is positive. Capacity remains very, very tight. So overall, market vibe will remain quite buoyant for the whole year and beyond.
One part of the market that certainly isn't flat, US high-tech imports in Q1 were flying, according to Martin Wormer, head of consulting at Avian. Those watching on Spotify and YouTube can see that computer and server imports were up sixfold year on year. Networking equipment up threefold. Computers and tablets also presumably flying off the shelves. Richard, this is your home market. Is this what you're seeing as well?
Absolutely. So this is just it's incredible, right? The demand from hyperscalers that's suddenly coming into the market. Of course, it's not completely sudden. There was demand last year, there was demand early in the year, but you can see it ramping up very quickly. And in the end, it's not surprising to see how, if you follow the news and the numbers of around capex that are being announced by the different hyperscalers as they race towards building out as fast as possible, building out as much infrastructure as possible, as quickly as possible. You can kind of see that those announcements lead to air freight in the future. And with that, I also think this is a trend that's not just going to go away. Will it be here forever? Who knows? But in the next couple of years, it's very likely that this trend will continue, just based on the investments out there. Interesting enough, of course, this is the traditional air freight market. The Trans-Pacific is definitely benefiting and very, very strong, with some sourcing in new origins, right? It's not all coming from China anymore. Like a lot of is coming from Taiwan, Vietnam, Thailand, etc. But there's a secondary stream as well that is not coming out of Asia. It's actually coming from the US and from Europe, as these infrastructures being built and configured. They find their way out again, and entire server racks are being shipped out of the US to Middle East, to Europe, to Australia as well, which is a secondary flow that's very interesting for air freight as well.
Yeah, that is an interesting secondary flow for sure. I wonder if it's coming up in rates. We'll be hearing our rate movements a little bit more when we talk to Neel Wilson at TAC Index in a moment. But first, one more story. And I think this is the big one for anyone in the e-commerce game at the moment. From July the 1st, the EU removes its €150 duty-free de minimis threshold. Every low-value parcel entering the block will pay a flat €3 customs fee ahead of full tariff rates coming in from 2028. This follows the ending of de minimis exemptions in the US last year. Forwarders have been warning for some time of a pre-deadline surge in Asia-Europe volumes. And if you look at this from Avian again, Chinese e-commerce air volumes recovered in April, up 8% year on year. But look at the regional split. Europe's up 17%. Is this front loading already underway? Neel, you were at the TIACA summit recently and you sit on the board. Very much your turf. What was July the first all anyone could talk about over there in Warsaw, or is the industry ready?
Yeah, it was certainly a topic of conversation in Warsaw, but it wasn't all that, folks could talk about. And I would say that the summit overall, it was the executive summit for TIACA, was actually really well attended. I mean, day one was packed house, standing room only. A lot of great speakers, good program. It falls off on day two as well. But I was actually surprised by just the sheer number of folks who were there, which was good. That always singles enthusiasm, right? People want to learn. People have a lot to say. So July 1st was definitely on people's minds, in terms of how the implementation was going to go. Were the regulators ready to sort of collect in the right way? Questions about if you have, multiple, house airway bills inside a master, how is all of this going to be, handled, right? And is it going to be fair? I mean, it seems like a pretty regressive sort of tax, right? To have a flat $3 on these low value products. But at the end of the day, I think the overall theme out of the TIACA conference wasn't this overwhelming sort of conversation on July 4th. I think it was about the industry in general, right? And how we have been coping with the war in Iran, what it was going to look like as, peace breaks out and, breaking news, right? We actually do have a peace deal now that's supposedly going to be signed on Friday in Geneva. So that's I think extremely good news for the industry. I think it will take some of the pressure, certainly out of the speculative fuel prices and all that we've been seeing. But overall, the TIACA conference, the mood was quite buoyant. I think people were enthusiastic about the back half of the year. Certainly, data center, the hyperscaler build out is something everybody's excited about, and finding a way to participate in that is clearly a goal of almost every airline and forwarder out there, because this is not a fad. This isn't going anywhere, right? The AI boom, as Richard said, is something that's going to be here at least through the medium term, if not longer. And heck, SpaceX is going to put data centers in space now, right? So I don't know what the rates are going to be to space, but maybe Richard can give us a clue as to what they might be.
Yeah, I think we'll come back to Richard. I want to get his take on de minimis or these European changes in a minute, but I just want to timestamp this for anyone listening, because as Neel brought up peace, I think it'll be the 40th time peace has been declared in the just over 100 days. I think the latest count. This one does look like it's going to stick. But we are talking on June the 15th, so please don't hold it against us if somehow it falls apart again. But this one does look a little bit more realistic, and hopefully that proves to be true. We'll come back to you in a moment, Richard. But first, rates. I caught up with Neel Wilson, editor of TAC Index, the price reporting agency on air freight rates and the calculating agent for the Baltic air freight indices. Price fluctuations have been dramatic this year. So I asked Neel what's been happening over the last month and how today compares historically.
Hi, Mike. Great to be on the show again and give you our perspective on what the numbers are showing and what we hear about what's behind that. After the start of the Iran war, we had that big spike in March and rates stayed very high through April. I think the picture for May overall was that the pressure eased a bit. The overall index, our BAIOO chart, which is the global composite, if you like, of all lanes and all outbound, that was down a tad. It was down a tad, but not much, a couple of percent over the month. And from a historical perspective, I think the thing to bear in mind about that is that it's still at very high levels. It's still higher than any of the recent peaks. If you look back at 2025, 2024, and 2023, indeed, you have to go all the way back really to the period of the COVID pandemic and its kind of aftermath to see when rates were higher. They were very escalated then because the market was very distorted. Obviously, in the pandemic, a lot of passenger belly hold capacity disappeared. And the market, as you know, is about 50-50 dedicated freighters and dedicated and belly hold, varying by lane, of course. And when that disappeared, there was a big loss of capacity, huge spike in rates. So you have to go back to that period to see when it was higher.
Yeah, massive spike there for COVID. Obviously the biggest spike that I know, and I've been covering this for about 25 years. So, I mean, that gives some perspective about where we are now. In terms of now, Neel, how much of this is basic demand?
Yeah, I think the demand is still pretty strong, and I think you probably get this corroborated by other sources that you talk to for the podcast. And so why is it still pretty firm? And I think there's various individual factors. Like one thing is the end of de minimis rules into the EU, which takes effect on the 1st of July. So we see some shippers rushing to move things ahead of that date. There's obviously some movement of things from other modes to air to get there in time. You also have continuing strength on Transpac, maybe not so much direct China US, but other ways where we will come back onto that, and some other lanes like Inter-America also looking strong. And underlying that, I think, is the continuing strength of the AI theme in markets. The AI theme, you see it in equity markets being driven higher, not just in the US, but also in other places, like in South Korea and Taiwan, for instance, where you have some very big semiconductor manufacturers, and the growth of those markets has driven them in the last month to be the 6th and 7th biggest equity markets in the world, overtaking all the markets in Europe, the UK, France, and Germany, which is a pretty significant effect. I mean, obviously, we have to see if it maintains itself, that the AI theme plays out. But we see that at the moment reflected very strongly in the air freight rates out of places like Seoul and Taiwan, where they're very, very highly up year on year, both to Europe and the US.
Let's look at some of those key markets then. The spot rate picture from key Asian hubs. You mentioned it already. How are rates behaving there? Are we seeing that same leveling off that we saw on the overall index in some of these key markets or not?
Well, that's a very, very good question, Mark. Because obviously the reason why we introduced the spot rates is that the market, it has various different segments, and our overall indices, the outbounds and the individual lanes, the TAC freight lanes, they're based on actual airway bill prices. So from those actual airway bills, you can't tell whether the contract was negotiated months ago and it's a forward contract, or whether it's a spot transaction that was negotiated last week or for today. So the spot rates effectively show you the marginal price, the price for moving something today or tomorrow. And if you look at those out of these key Asian hubs, we have 3 currently, we're going to be adding more. Korea, you can see it was rising. There was a delayed effect there after the big jump in March. It was rising in April. It sort of flattened out recently, and no longer going up. Obviously, there's intraday variation. If you look at India, the India spot rates, the BAI spot from India, there was a huge jump after. That's a very belly hold market, and it was flat for a long time. It was a huge jump when the war happened in Iran, because that disrupted the flow of goods enormously there in March. That started to fall in April a little bit, and it's gone down a bit further in May. That's what we've seen with India. If you go into Hong Kong, which is the biggest cargo airport in the world by volume, the interesting thing there is that it had been flattening out last month, and more recently, particularly in the last week or so, going into the first week of June, it's been firming up again, reflecting those things I think that we were saying about the strength of demand on the previous point.
Neel, obviously, war in the Middle East has been a major factor in terms of rates rising. Obviously, tied to that has been fuel price increases, which we've seen across modes, not just in air cargo. Where are those jet fuel prices at the moment?
Again, really good question. So what's underlying this? Why did rates ease a bit in May? And I think one of the key factors was that jet fuel rates, which had escalated dramatically, as I think we talked on the previous call, in March and in April. If you look at the IATA jet fuel price monitor, which reflects the Platts data, you'll see the jet fuel prices dropped every week in May a little bit, cumulatively more than 24%. So they're still up 60% year on year, more than crude oil. But it's interesting why that's the case. They are firming up again, I should add, in June, as I think you can see from that same table. So why is that? I think we mentioned this last time. There were a lot of flight cancellations in May, which may have eased demand a bit. There were 12,000 plus at least announced, led by Lufthansa, Turkish, China Eastern, various other airlines. There was also the release of strategic reserves by the US and by others to add supply to the market. And the other thing that was happening, I think we noticed on the call last month, was that the China, which had stopped exporting jet fuel initially when the Iran war started, had started again, which again eases supply, particularly to its neighboring countries in Asia, which rely on China for a lot of those supplies. The final thing, I suppose, is that there's been expectations that there will be a deal between the US and Iran to end the conflict, and that there will be a reopening of the Strait of Hormuz, which is something that is going to be needed. So markets continue to be quite sanguine and optimistic about that's going to actually happen. As of the call today, it may be different by the time you put this out. It still hadn't quite happened yet. So, and in the meantime, those inventories of jet fuel and of crude are continuing to go down. So they can't go down forever.
Thanks for that, Neel. Now, just a little announcement for everybody. The Freight Buyers Club will be attending Air Cargo China at the end of June. In fact, we'll be doing some interviews, I think, at the TAC Index stand. If anyone wants to come along and say hello, details on screen now. Neel, what else have you guys got going on?
Well, we've got, we're working on various things. I don't know whether I'm allowed to say too much about them. One of the things is we have this additional tool called TAC Explorer, where in addition to the lanes where we produce indices, we're adding guidance on about 800 more lanes where we have data. We have some data, but we don't have indices yet, but they'll give users a lot more guidance on some of those smaller lanes around the world. We're also adding AI tools to the data so you can explore further the characteristics of each lane. And going onto the Air Cargo China, I won't be there, but my colleagues, our founder and leader, John Payne Burnett, and our head of research, who runs the data team, Chris Taylor, plus our head of sales in Asia, Al Lambert, they'll all be there, hopefully seeing you on that stand in Shanghai.
Welcome back to Air Cargo Unpacked, where Neel and I are joined by Richard Brookman, Chief Commercial Officer and Head of Sustainability at Atlas Air. Richard, you've just heard Neel Wilson telling us rates are at levels we haven't seen since the COVID crisis. Now, I imagine that's not entirely unwelcome news in the CCO's office. But seriously, when rates are running this hot, how does it actually change the conversations you're having with customers? Are shippers looking to lock in long term? Are they holding their breath, riding the spot market? How are you managing this, and how are your customers looking at it?
Sure. No, look, of course, increased yields are not something that I ever are ever opposed against. It helps us, but in the end, it really doesn't change. It doesn't change our approach. It doesn't change what we have been doing over the past many years. In the end, it really underscores how important it is for customers, for the big logistics companies, so those the shippers, etc., to have more control of capacity and to actually have some of your capacity needs locked in on long-term agreements like we do. So it just proves the value of having these arrangements. And we always go through cycles, so right? In any contract cycle, there's always a year that is just not as great. And you may say, hey, the rates are a bit lower, and my long-term rate maybe at this point slightly higher than the market. But over time, it proves to be a really good setup with stability, control of your destiny. And I think this is just the next spike that proves it. And to me, the biggest surprise is actually that there's still a few really big shippers and a few really big logistics companies that have not embraced this yet. And maybe this next runoff in fuel oil and cost will actually get them over the line and change their view of this.
Why are they not embracing that, Richard?
I think they've
What
been
reasons are they
historically,
giving to you?
yeah, they've been historically able to find the capacity they need, or feel that being constantly able to play this procurement game and always pressure rates down is very beneficial. But in the short term, sometimes it really is, right? But I think in the long term, they'll see that there's a real benefit of having a mix, some control and some, of course, capacity you need, and they can buy on an as needed basis, or whether it's spot or whether it's seasonal, etc.
Neel, is that putting your forwarder hat on? Is that the sort of gamble you might recognize from your previous incarnations?
Yeah, I mean, no, I think what Richard's saying makes a lot of sense. I mean, it's exactly the strategy that we pursued at Flexport, right? I mean, I was Richard's customer back then, and we tried to balance, our capacity needs. It was a very volatile time, and creating that certainty, right? Albeit at potentially elevated costs, but over a long period of time, it proved to be extremely sustainable and really shielded us from the volatility of the market for a good chunk of our capacity needs. But one more quick question, for you, Richard, before we move on, is that, when rates do get this high, it can cut both ways, and some cargo gets priced off the aircraft. I'm curious right now, are you seeing any of that? Is there any sector, are there any customers in particular industries that are just getting, priced off the aircraft and therefore you're seeing some demand destruction at the margins?
Look, I think a little bit of it has been happening for the last couple of years, right? Ever since COVID, and with a big increase in demand from e-commerce and initial other goods as well, capacity is limited, and it continues to be limited. So some goods will have not been able to make it on the aircraft. However, at the same time, air freight is very resilient to price fluctuations. It's not very price sensitive because if there's an alternative mode, it's going to be a lot cheaper, right? If you send something by ocean, it's often a factor 10 cheaper. So if you can do that, you're already doing that. So there's an inherent need for air freight, and that's why it's so resilient to price fluctuations. At the same time, because capacity limited, something's got to give, right? E-commerce and now data centers taking so much of capacity, something else will struggle more to get capacity. So we'll see a bit of a shift again.
Just on that, well, it's e-commerce really, isn't it? But let's come back to the de minimis changes. When the US scrapped its de minimis exemptions last summer, just came a few months after we had the Liberation Day tariffs. Obviously, our Atlas is right in the middle of all this. Your CEO described platforms shutting down sales overnight, and it wasn't really because of higher costs, but because of the lack of procedures, rates changing day to day, freight stuck at customs, bookings cancelled. What actually happened to your network then? And does this tell us anything about Europe on July the 1st, or is there not really a comparison there?
Sure. So first of all, I think the two events are different, so I'll get to that. But what happened last year when the minimus was eliminated after Liberation Day, um, we saw these big giant e-commerce companies in Asia, in China specifically, they were able to pivot extremely quickly. It was not necessarily a matter of the issue of paying for the tariffs; it was a matter of data capture, and especially some of the platforms that link manufacturing on one side and customers worldwide on the other side. They struggled for a bit to get the right data and get through the right processes. So you saw a big dip in US bound e-commerce. At the same time, overnight, they were able to change their advertising algorithms. You saw the spend on Google, you could track it, saw it plummet by 95%. At the same time, Brazil spend went up, and Middle East spend went up, and the flows just literally they just moved with that. So we were able to change our network very quickly for these customers, the ones that were controlling capacity, and all the capacity we had on contract with these, nothing was canceled, which was really surprising. Nothing was canceled. They just moved it to different markets, opened up Peru, aimed more for Brazil. A lot of focus on South America ever since then. So that was a great way to again show that if you have the capacity, as you control it, you can deploy it where you need it. I do think this one is a bit different. First of all, the European Union has taken a bit longer to actually put this in place. First, they need to take, then inherently, they need to get consensus with all their member states. So you have more notice. And I think e-commerce companies will be prepared. Now, at the same time, of course, an increase in price will have some impact on demand. And the expectation is that over the summer, volumes will slow down a bit. But we've seen this in other markets. Brazil implemented a tariff 2 years ago in the summer. Saw a 20-30% drop off, but within a few months it had recovered. So I do think in Europe things will recover pretty quickly as well.
Richard, thank you, for that perspective, and I agree with you 100%. What we saw after Liberation Day last year is volumes dropped to the U.S., but you're right, they flowed to Latin America, and you just saw it. Just the numbers and the capacity just moved along with it as those advertising dollars and promotional dollars, move south in the LATAM. And I agree with you. I don't think Europe is going to be much different in the sense that there will be an initial drop, but then they tend to recover, right? We even saw that in the US, right? Where volumes have largely recovered, not fully, but have largely recovered. And I think it's going to be the same thing, from a Europe perspective. But if I could just go back, really quickly at the TIACA summit, Richard, your colleague and Atlas's chief strategy and transformation officer, Martin Drew, said we're moving into an era of compliance. that the low data, low accountability era is over, and companies need to step up with technology delivering better quality data. So, from the Atlas Air commercial seat, what does stepping up actually look like?
So look, for stepping out, it's really the shippers and the players there that need to provide the data, right? We of course, as the airline, we assist with it. We will supply we will submit all the data to customs. So it's really important for us that data is good, the quality is right, that all the information is there, because as you land in the U.S. especially, if it's not, it will lead to delays. It will lead to delayed in clearances. We may have to offload pallets to have more packages inspected. So that compliance, I think, is a good thing. Also, I think for e-commerce as an industry, they had this cross-border invoice. I think it's a good thing as well. In the end, it was a bit of a loophole, known to Minimis, right? There was taxes on other imports. We put it by boat and fulfilled from the US and not on the direct mode. Um, the model itself does not rely necessarily on that loophole. I think the model relies on the choice that it provides, the ability to not hold a lot of inventory in stock, to not make a big gamble on the things that you think you're going to sell next month, that you have to pre-order by delivering everything direct from China. I think there's an inherent model for them, and that's not going to change. So it will just make them more grown up, more compliant, and in the end, the quality will probably come up as well of the products that they ship.
No, I think Richard, I think that's great. I think you're right. I mean, compliance and accountability are not bad things. And bringing more structure to the way this vertical does business, I agree with you, is overall a win-win, over the long term. So thank you for that. Just really quickly, just beyond de minimis and beyond all of these big macro-driven fluctuations that we could see in the e-commerce business. Do you see the demand mix out of China changing? China's always been the engine. We just mentioned, both of us had mentioned, during this conversation that Thailand, Vietnam, Taiwan, et cetera, are growing at double-digit rates in terms of their exports, given the industries that they're focused on. Do you see a big shift happening? Let's go back to China in terms of Chinese exports. And what are the implications, right, for Atlas, right? Where you had most of your capacity parked in China. Do you see how these demand flows are changing that over the short and medium term?
Sure. So I think, of course, the mix always changes a little bit, and the airframe mix has changed over the last couple of years, with, of course, a big push into e-commerce, and now we see a new kid on the block with data center equipment, where the volumes are increasing so quickly. So yes, of course, total mix will change a little bit. Out of China itself, I don't think it will change materially. Maybe a little bit less e-commerce, as there's demand, very strong demand for components for data centers, etc. You of course see the geographical shift. Some of the production went out of China into Thailand, Vietnam, and Taiwan, of course. So that is structural. We see to continue, but in the end, it's pretty much just as far to either one of these countries from the U.S. as it is to mainland China, and we are able to move our capacity with those flows. At the same time, it also underscores how important it is to have a big variety of customers in your portfolio. None of our
Mhm.
customers has more than 8% of our block hours, so that diversification is really good, and it allows us to serve all the different parts of the industry, the growing ones, the stable ones alike.
Thank you, Richard. I just want to have a quick look at what's happened in the Middle East this year. Obviously, we might now have peace, but it's been very disruptive. Avium's data shows charter capacity jumped 31% as the conflict began, and it's up 39% on a year ago. Um, Richard, how have war and fuel availability, how have they affected your scheduling this year, routings, fuel uplift, crew planning? And is that charter surge, is that something that you've really seen in the past?
Yeah, so we've seen it. Of course, when the war broke out without notice, or not real notice, it was quite disruptive. We had a few aircraft in the Middle East that were stuck for a while. We had to get them out. We were able to do that safely after a few days. And of course, the first month, especially the local, the real Middle Eastern airports, like in UAE, etc., and even in Saudi Arabia, were materially impacted. At the same time, air freight does generally not go out of the way of a crisis. Crisis typically helps air freight, and especially on the charter demand. So initially, you did indeed see a bit of a spike in charter demand to backfill the capacity that was lost with the grounding of some of the Middle Eastern capacity. So to help on the Asia to Europe trade lane, but also other trade lanes saw it as well. Going further, we see a lot of charter demand increasing. Again, driven by data centers, that those big flows, and as they struggle to get capacity, charter is a good option. But we also see a lot of oil and gas coming up. Just even chemicals and other things that have to go to the Middle East because supply chains are so disrupted in that region. So yeah, charter demand will go up. I see it go up in most regions of the world, but with different drivers.
Richard, thank you for that. And I think your analogy in terms of how air cargo, responds in a crisis is exactly the right one. I think like first responders, right, air cargo sort of runs to the crisis because, that's where the opportunity is for these businesses. I am just curious, just as networks begin to normalize, Richard, and we've seen the Middle East carriers, right, their networks largely normalize now, both on the passenger on the freighter side. Do you expect sort of the intensity of the charters to continue, or do you expect that to sort of, come back into a normal cadence and you get more into sort of, your mix of long-term contracts and business? And yes, there is a mix of spot business in there as well. I'm just curious how you're going to see that play out over the next few months.
Yeah, no, obviously the demand for replacement charters, that is of course going to go away, or that is going to be less. But I do think demand for charters will continue to be quite strong, and that's really just again a function of capacity shortages, and at the same time a really strong uptick in demand in certain regions and for certain flows, hyperscalers predominantly. So as capacity becomes tighter, you always see more demand for charters as companies or as products struggle to get the right lift. A charter is always the right option, or a good option to try to secure that capacity. So I do think charters will remain pretty strong, maybe a little bit less strong than we saw right after the conflict.
Thank you, Richard. Let's turn to the fleet. In March, Atlas placed what's been described as potentially the largest wide-body freighter order in history, 20 Airbus A350 freighters with options 20 more, making you Airbus's biggest customer for the program. For a company so historically associated with the Boeing 747, it's quite a statement. What can you walk us through the thinking? Why the A350F and why now?
So look, it all starts first of all with confidence in the market, right? The world has a very much of an aging freighter fleet. Capacity additions has been fairly limited, and they will continue to be quite limited for the next few years as we ramp up towards the next generation aircraft coming online. So we believe that its capacity shortage remains. So making a large order like this makes a lot of sense. Now, for the first time in history, we actually have two really good platforms competing with each other. Both the A350 and the 777-8F. They're both great aircraft. Slightly different uses, slightly different fit for specific customers or for specific markets, but both are excellent. So we decided to go with the A350, great airplane, but it doesn't preclude us from in the future maybe also doing an order with Boeing. Look at the passenger side. Most passenger airlines operate a mixed fleet with different with both manufacturers, and that can definitely happen on the cargo side as well. So really excited about it. The A350 will be coming on the market a little bit earlier than the Boeing. That is also, of course, a contributing factor here. But it will be great to see two really good platforms competing for the next decade and beyond.
Thanks, Richard. For that. The A350 order was really a momentous occasion, really a nice validation for that platform, and it's good to see that the 777X could still potentially, have a home at Atlas over the long term. I want to move on really quickly and talk about the Air Atlanta investment. it seems like, the big announcements are coming from Atlas every 30 to 45 days. So it was fun to see that Air Atlanta investment. I believe you've taken a 49% ownership stake in them. I think it's probably the maximum that's allowed by, European law. Tell us a little bit more about the thinking behind that investment, the strategy that's there. We know that Air Atlanta is a great operator. They do a really good job keeping older aircraft up in the sky and generating revenue. Perhaps there's something to learn from them there. But I'm curious, in your words, what was the sort of the strategic rationale for this investment?
So you kind of touched on some of the points already. First of all, it's a great operator. Air Atlanta is a fantastic airline, doing a great job operating a good size fleet that's very complementary to Atlas. I think the other part, which is really important, if you look at the route map of Air Atlanta and the route map of Atlas, and you lay them over each other, they're perfectly complementary. Air Atlanta is very strong into Africa, of course, on the Asia to Europe market segment as well. And that's where Atlas, of course, has less coverage, and it's just not in as good of a place to offer our customer solutions. So by this strategic partnership, we're able to offer the large customer base that we have even more solutions, also in the markets where we may not always be the best operator ourselves or the most efficient operator, or we may not have the traffic rights. So very complimentary and super exciting.
Richard, to finish, let's swap hats because you're also Atlas Air's head of sustainability. That IATA outlook puts SAF production at just 0.8% of jet fuel consumption this year, and IATA calls the current policy framework wholly inadequate, piecemeal policies that will fail. So how does an operator like Atlas decarbonize when the fuel simply isn't there? And do you share that frustration that the policymakers have been talking about?
No, absolutely. Of course, the biggest challenge is indeed well, the biggest challenge is cost. To be honest, in the short run, supply is doing okay. And but that's more a function of demand being suppressed because cost is really really high. So I think the cost is the biggest concern for SAF overall. Um, I think some policies seem to be working better to promote SAF, like the U.S. has taken with the Inflation Reduction Act. That really showed the U.S. taking a lead in SAF production. While the stick approach, refuel you on the European side, I I understand the logic, but I don't think that's the best option, right? In the end, policy needs to help making a SAF more affordable. You get that by potentially subsidizing, by making it easier to invest in facilities and making it creating incentives to use it, um, and to make it as economical as possible. So yes, I share the frustration. We'd like to do more. We were able to grow our SAF volume tenfold last year, from albeit quite a low base, and we continue to do this. We see SAF also as something we can help our customers with, right? We sell dedicated capacity. What we do here is to help them um, decarbonize or lower the carbon footprint of that dedicated capacity that we offer to our customers. So we see ourselves as a party to help them obtain SAF and other technologies to reduce carbon as a value-added service.
Yeah, Richard, thank you for that. And I agree with you. I think that the carrot approach here is going to be much more effective than mandating it, because you still have an enormous price gap. And we know that, just like we had this crisis recently with the war in Iran, as other costs get out of control, airlines have a heck of a lot less money to invest in SAF and sustainability. And in fact, over the past, recent quarters, we've seen a number of airlines actually reduce their sustainability targets, right? Or push them out even further. These are big passenger carriers who know they need to spread that out over a longer period of time simply because the dollars and cents don't add up. Just, do you think we need a completely new does a new SAF technology need to emerge here to get the price to a point where it becomes affordable, where people can actually make a realistic decision to switch over for a good percentage of their cost? Do you think we have the right technology at the moment?
Look, SAF is very different from jet fuel, right? There's so many different SAFs out there with different specifications. So more technology and innovative new ways of producing is absolutely really important. Price is very, very important. At the same time, the cost of SAF in itself is not necessarily the issue. Look at where the fuel price is in May. It was $5 a gallon, right? Give or take a little bit. A year ago, it was $2.20 a gallon or $2.40 a gallon. A year ago, you were paying $5 a gallon for SAF, right? Um, it's not that air freight cannot sustain that kind of a cost. It's the competitive pressure between the alternative, right? That really drives us to have to use jet fuel because obviously everyone else is doing that as well. So more technologies need to be there. We need to get the gap between the two smaller, and I think we'll see more uptick. And I think our customers definitely in certain regions are quite interested in furthering this. That will increase demand over time.
Thank you, Richard. It was great getting your perspective on all these topics this week, and really appreciate you joining us for this edition of Air Cargo Unpacked.
Thanks, Neil, and thanks, Mike. I think it was very enjoyable. I loved the conversation and a very interesting topic. So thanks for having me.
Thank you, Richard. And that's it for this episode. Thanks, as always, to Neel Wilson and TAC Index, calculating agent for the Baltic Air Freight Indices, and to our sponsor on Tigos Cloud, the freight forwarder profitability specialists. For more from the Freight Buyers Club, subscribe wherever you get your podcasts and follow us on LinkedIn and YouTube. I'm Mike King.
And I'm Neel Jones Shah. See you next month.